Welcome to Market Pulse with Act Research on FleetOwner.com. I'm Josh Fisher with FleetOwner, and I'm joined by Act Research VP and Senior Analyst Tim DeNoyer to get insights on trucking freight environment, regulations, equipment demands, and more. Tim, it's great to be with you today, and I can't wait to pick your brain on what's in store for the trucking industry in 2024.
Thanks for having me, Josh.
Let's dive right in. We are about a little more than halfway through 2027. We are more than halfway through 2024, but I have 2027 on my mind, as I think a lot of fleets do. We have the emission mandates coming up on manufacturers and fleets that is going to really impact the market. So as we look at these strict emission regulations, and as you and your team have been looking at that at Act Research, how do you think it's going to be influencing the overall freight demand in the market in the coming years?
I think it may be one of the biggest reasons that we're facing such a long and drawn out freight downturn right now. Actually, I think the capacity additions that are happening by private fleets in particular, as they prepare for these 2027 emission standards, are really adding capacity to the market and keeping things loose. And that keeps the demand environment relatively soft, in part because private fleets are insourcing some freight, and in part because they're also increasingly competing in the for-hire spot market.
And we've seen some, smaller carriers come out of the market. A lot of those who jumped in during the COVID boom, so to speak. Do you see, though, the private fleets being able to keep up with kind of having a lot more play within the spot market as the year goes on?
It's a great question. I think that is a key question to answering, when this downturn will eventually end. I think there's a lot of challenges for private fleets in terms of operating in the for-hire market, trying to fill some backhauls here and there. I think they're pretty good at it. They have some skills they've been building for over a long period of time. So this is certainly not a new thing, but we do think that private fleets are, amping it up a little bit in terms of filling those backhauls. And it's a big fleet, and so even small changes in a big fleet can have a pretty big impact.
That's true. And it also, it seems like private fleets traditionally do a pretty good job of replacing their equipment. And so let's talk a little bit about the 2027 emission mandates and this pre-buy. Are you seeing, has that begun yet? And can you talk and also I think when we talk about the pre-buy, I'd love to get what your definition of that is.
Sure. That's also a great question, because if we had talked this time a year ago, we probably would have ascribed a lot of the purchasing of equipment to sort of rebuilding supply chain resilience from the pandemic. But our definition of a pre-buy is effectively whenever you continue to add capacity into a down market where rates are down, which we're 2+ years into that environment, probably almost 2.5 if we look at just spot rates. And so we're still going to have a very big year of Class 8 truck production this year, even though it does look like the second half will be down from the first half. But it's still going to be a very big year. So that tells us that the pre-buy probably started last year. And we were expecting it 2025 and 2026 if it were to mirror the 2005, 2006 pre-buy. I had a VPA of 7, which seems to be a better corollary. But because private fleets have longer trade cycles, they tend to own their trucks much longer than the 4 to 5 year for-hire trade cycle. 8 years, 9 years plus. Some private fleets own their vehicles and then run them into the ground. And so those longer trade cycles, we're 2.5 years away from those 2027 standards right now. So even the for-hire fleets are maybe doing a little bit of pre-buying, but I think it's been primarily private fleets over the past year.
Interesting. So, because it's also, we had the previous pre-buy before 2007, but that wasn't preceded by a pandemic that led to all sorts of supply chain problems. So after we lived through that COVID era supply chain problems that it sounds like have kind of, are subsiding, but now we have a new drive for fleets to acquire equipment. What are some of the potential challenges you think that OEMs might face to meet this heightened demand over the next couple of years?
Well, this fight against the cycle, I think, is the biggest challenge, because we have, frankly, sort of needed a reduction in new equipment capacity for the cycle to move forward for fleets, and that hasn't happened. And so there's this big challenge right now where demand for new equipment is drying up in no small part because this down cycle has been dragging on for so long. And so the OEMs are going to have a major challenge, because this essentially suggests that current build rates can't hold up. They need to come down, and ramping the supply chain down before it's like, demand is likely to increase again, and ahead of 27, at least in 2026, if not late 25, which was the original expectation. But one of our general tenets is that you can change the timing of demand, but you can't change aggregate demand. The economy needs as many trucks as it needs, and if we pull forward some demand, there will eventually be a low buy. But it does look like there will be some tumultuous years cyclically in the next few.
Is there any advice that you would give to fleets as they now look at this, particularly some of those smaller and mid-sized fleets, about how they could best navigate this situation? I bet a lot of them feel like they're competing with a lot of big companies that can maybe have a little bit more capital to invest in this and have those long-range plans. But what about the medium and small fleets? Where do they fall into this?
Well, those that have managed to stick it out this far are probably pretty good at managing their costs, and they're going to need to stick it out for a while longer. I mean, the load activity is not really picking up very much yet. I mean, we're starting to see some signs around seasonal events, but I think demand is going to be relatively soft. And so one of the things that we're seeing and we're hearing from some of our friends is that they're being choosier. I mean, small fleets and owner operators in particular are maybe not running as many miles, but really just kind of focusing on trying to make those miles count a little bit more. And unfortunately, when you hear those kinds of things, it does kind of suggest the downturn is not quite over, in part because there's some latent capacity out there and some underutilized capacity. And so it's going to take a little bit more economic growth and that reduction of equipment supply to turn the balance higher, and it's not quite there yet. It's going to be a little while.
So it seems like if it feels like as this year started, we're looking back about 7 months ago, there was always this light at the end of the tunnel for this freight recession. But I'm getting a sense from hearing you that light still is we're still not all the way through the tunnel, I guess. Right?
I would say there was a freight train coming down that tunnel this year, like because the pre-buy just continued, and it just kind of steamrolled that light this year. And I think there's always, if you look far enough out, it's not hard to be optimistic that upcycle is coming for the industry. But these next couple of years will be a challenge, and we do have to watch things like Class 8 orders and sales very closely. The good news is June Class 8 truck sales were actually below replacement for the first time this cycle. So that suggests that the Class 8 tractor fleet didn't grow in June for the first time this cycle. Part of the reason for that was a mirror fire at a supplier. So there was at that point, there was something like somewhere between 7,000 and 11,000 Class 8 tractors that were red tagged, so built but unfinished, and awaiting some mirrors. And so that's part of the reason that sales slipped. But they have been trending down. They slipped a little bit further, of course, because of the supply chain. But and I think that'll be somewhat temporary, but we need to watch those very closely. And as the fleet starts to, it's slowing down in terms of fleet growth, but once it starts to contract, I think we'll start to see a better freight environment for those small fleets.
What are some of those other things that you're looking at, like some key factors that also could maybe help out some of our fleet audience here about what they should be looking at in the with the remaining months of 2024?
Certainly, how things perform in peak season is still up for, for grabs, if you will. I think the market is pretty close to balance. I still think it's over capacity overall. They're still in a relatively loose environment. We haven't quite, the pendulum hasn't swung back the fleets yet, but it's starting to swing. And I think that's, how quickly that happens will really depend on how strong the U.S. consumer is. Looking at things like retail sales and industrial production are factors that we look at pretty closely. I happen to think that the overall freight environment is actually a good bit better than I think most sort of gloom and doom forecasters would kind of suggest right now. I think our freight composite's growing about 3% year over year. Retail sales are up about 2% year over year in real terms. Industrial production is up 1 or 2% year over year if you look at the Fed's index. And I think there's actually some decent growth out there. It's not wonderful, but it's not declining anywhere near what you see in the Cass index, for example, which is down mid-single digits. And that difference, in our view, is that growth of the private fleets. It's the private fleets who are taking a lot of this freight. But if you look at big picture indicators that sort of measure the whole market, like our freight composite, like imports that are up double digits in the first half, intermodal volumes, which are up high single digits in the first half. Those kind of things do suggest there's a good amount of freight growth. It's not evenly spread yet. It's not that strong, but it's starting to grow.
Wow. Some really interesting information, I think to think at. I'm sure this is something that you'll be discussing during the ACT Research seminar in August. I'm looking forward to going there. Maybe you give us a little tease of something you might be talking about during that.
Absolutely. We will be covering all of this and more, of course, and digging into the forecasts in a lot of detail. We've got a lot of great participants. We've got people from places like Penske, JB Hunt, Arrive, lots of different great participants and speakers. So we'll learn a lot from our friends in the industry and share our own opinions as well.
Well, that's great, Tim. I always like listening to your opinion. It's great to talk to you virtually. I look forward to speaking with you in person in Columbus, Indiana, in August, and maybe we can dive a little bit deeper into how the rest of the year is going to look.
Sounds great. Thanks for having me, Josh, and I'm definitely looking forward to having you at the seminar next month as well.
Cool. Thank you, Tim. Thanks, Tim Denoyer of ACT Research. Thank you for joining me here at FleetOwner for this first Market Pulse chat, and we hope it's the first of many.
You're very welcome.